Cool. And welcome, SuccessGrid Nation, to this new episode of the SuccessGrid podcast. In this episode, I have with me Mike Jezowczyk. Sorry. He is the founder and host of the Small Business TaxSavings Podcast. Mike has spent his entire career as an entrepreneur. He was CFO and co-founded several companies. Throughout that journey, he has experienced all business stages, from the good ones to the bad ones. Mike, welcome to the SuccessGrid Podcast Live.
Yeah, thanks for having me.
Awesome, Mike. So first of all, we are going to be talking about businesses and how they can save on taxes with their business, because we know that a lot of businesses, especially when they are starting, it could be a concern for them, right? So from your experience, how do you see business handling their taxes from the start? Should they actually focus on these things, or should they neglect these things till the end of the year, let's say?
Yeah, it brings up an important concept. We get a lot of times this idea of tax planning versus tax paying. And so when most people hear the word tax, the first thing that comes to mind is preparing and filing taxes. And while that's important and required by law, that's really just taking information and sending it up to the government agencies. And so where my focus is, and what I hope that listeners, whether new or established business owners, gather from this, is that when I hear the word tax, or when business owners hear the word tax, I want them to be thinking about tax planning. What can I be doing now, today, throughout the year to make sure that I'm paying the least amount in taxes legally possible? Because for most cases, the way that you reduce your tax bill is what you do throughout the year. Tax prep and filing is after the year's over. And again, it's just information reporting. So if you're thinking about reducing your taxes when you're filing your taxes, it's too late for the majority of tax strategies already. And so if people can start to walk away with the idea of tax planning versus tax paying, I think it can really get them on this idea of, hey, what can I be doing throughout the year to pay the least amount in taxes as legally possible?
Exactly.
And I think,
but the problem is, this is new concept for people. A lot of people, they are barely planning for their business itself. You are in business, so you are planning for the business to succeed and bring more money, but they don't look at taxes as something to plan for, right?
Yeah, and this is what we kind of call a snowball effect. And it happens again to really beginning entrepreneurs is they have this first year of business. They're not thinking about taxes, as you kind of mentioned, and you get to tax season and now they're hit with a big tax bill. They don't have the funds on hand to pay that tax bill, so they get on a payment plan and they're slowly paying that tax bill off from the prior year, while at the same time they're making money this year. And they can't put money away for taxes on the earnings they're making this year because they're paying last year's tax bill. And so it's a bad kind of snowball effect that we see people get in when they first start a business, is that first year can really move into in effect year after year because they get so far behind in that first year. And so what I always say as a business owner, the hardest part or the hardest concept to understand is, especially if you come from a W-2 employment job, is that, hey, taxes are no longer taken out of our paychecks. We're responsible for that. And so I always say to business owners, take a percentage of your profit, throw it into a savings account, and even, take a higher percentage than what you even think you're going to need for taxes. Because guess what? If at the end of the year you put away too much money, you're in a good position. That means you have extra money to spend on your business, in your business, or take personally, whatever that is. So I'd much rather have someone in that situation where they put too much away than someone that put nothing away or too little away. And now they're crawling away at that when they should actually be running their business and putting taxes away for that year's income, if that makes sense.
Yeah. So it makes sense, for example, for businesses that actually making a profit, but for businesses who are not making a profit or they are losing money, I believe they don't pay tax at the first place, right? Is that some concept available in general?
Yeah, for the most part, a general statement is no income tax if you have no income. So yeah, that's a general standpoint to be considered of. And don't get me wrong, a lot of businesses when they're first starting out are probably in that situation. Mm-hmm. And if you're in that situation, now this is a good time to know that, hey, if you're a business owner, or if you plan to be a business owner for years to come, you're going to come to a standpoint where you start to make profit.
Exactly.
And keep this idea in mind whenever
Of
that
course.
time might
No,
come.
no,
That
I'm just saying
difference
that
way.
just to people to know, like, so maybe because a lot of people, we don't, me personally, I studied accounting here in Jordan. I know that in general, I know accounting, I know about finances, but a lot of people don't know about finances, for example. So they don't know like that. They think maybe they should pay taxes with whatever the case sometimes. So they need to be educated that you pay taxes when you actually are in a plus mode, when you are on the positive side of things. It's not like when you are not in the negative side of things. So generally businesses, when they enter the business, they start the business, they want to make profit and they start making profit, right? And they are obliged, like you mentioned, to pay tax. And you mentioned also that they should put money aside, right, for that. So in that order, if I would have put money aside in advance in the beginning of the year, that would be called, like, for example, in accounting, I'm just accounting, that would be something called, I think, reserve, something called reserve principle, or these kind of things. It's like when you, for example, planning, you might lose this money or you might not get this money from the customer. You put it in the, you can erase that amount as it's not allocated back to you, right? This is kind of the basis that you're saying here also.
Yeah, there's no like kind of technical term like that, but that's exactly, this idea of a reserve account is exactly what the concept would be is, hey, let's kind of predict what that amount's going to be, put it away. And if it ends up being high, if it ends up being low, we'll adjust for that when the actuals come in. But yeah, just kind of creating that idea of what that amount might be.
Yeah. So what do you think one of the best strategies to reduce or decrease tax? Because I think if any person have any set of liabilities, that would be one of the things that could decrease tax, or buying assets, for example, that do not produce or do not bring income, right? So can you talk to us through that?
Yeah. So, one concept I like to talk about is this idea of maximizing deductions. And when so many people hear maximizing deductions, the first thing they think of is, let's go buy a new vehicle that I don't need, or let's go buy a new piece of equipment that the business does not need. But hey, we're going to go buy something and get a tax break for it. And I hope to kind of break the concept of that. Now, of course, if you need a new vehicle, if you need some new business equipment, go and buy that stuff. Like there's some tax benefits to that, but don't go out buying things that you don't need simply for a tax break, because it doesn't add up to where it's going to be beneficial to you in the long run. So when I look at this idea of maximizing deductions, my concept is going to be, how can we take spending that you're going to do anyways, you're doing no matter what, and how can we find a business purpose for that and bring it into the business and get a business deduction for it? And so when I talk about this concept, we often talk about after-tax versus pre-tax dollars. Mm-hmm. And so if you're a W-2 employee, as an example, you get your income, your gross wages, and then the government takes all these taxes out, and then whatever's left over is your take-home pay. That is called after-tax dollars. So if you go and do spending on different things, it's all with money that's already been taxed. Mm-hmm. On the flip side, if we're a business owner, we have our sales or our revenue, and we have all these expenses that go into it. And whatever is left from that is what we're taxed on. So any expense we put into our business is considered a pre-tax dollar. Mm-hmm. And so when I look at this idea of maximizing deductions, we're saying, let's look at that spending that you're paying after-tax dollars with. Let's look at that spending that you're going to do no matter what. And can we find a business purpose for some of that and get it into a business and move it from an after-tax dollar into a pre-tax dollar? And so the concept behind this can go into many different types of various different expense categories. Big ones that we like to talk about is a home office. If you have a home office, you're paying rent at your home, or you're paying a mortgage for your home, or whatever it is, regardless of if you have an office or not. But being a business owner and taking advantage of a home office, now you're moving some of that after-tax spending that you're doing into pre-tax spending. Mm-hmm. Another concept that I love to talk about is, let's say you have children. You're supporting your children in basketball camps, and you're sending them to parks with their friends and doing all different things that cost money. And traditionally, obviously, you're spending after-tax dollars on this. You want to send your child to a sports camp, you're using your personal after-tax money that's already been taxed dollars to do that. But if we can find a way to hire your kids in your business, find something that your child can do within your business Now they can be an employee of your business. Now we can have a business deduction, and your child, depending on the income amount, how your business is set up, may pay no income taxes on that. And so again, it's just a shift of saying, okay, we're going to be spending money on our children, supporting them in ways, but how can we turn that in from an after-tax spending into a pre-tax spending by finding a business purpose for that spending? So that just goes for an example of where we're not just spending money for a tax deduction. We're not spending money to waste it. It's just reorganizing where and how we're classifying that spending that we're already doing.
So like there has been a lot of talk about like now recently Elon Musk has bought Twitter, right? So he already owns big companies, massive companies like Tesla and SpaceX. Now, speaking for that example, when he bought Twitter, I think it was 44 billion or so. Is that correct? So is that an advantage, for example, for him in regards to taxes, do you think?
Not necessarily. So, buying another business is not going to get you a tax deduction today. That's going to be something that, obviously it's creating
we're talking here about a big business. We're talking here about Twitter and Elon Musk. It's not like small business, but in the general concept could apply to both, right?
Right. Yeah. So buying a business does not get you a tax deduction today, as it would be like if you go out and buy a vehicle for your business. That's going to create you a tax deduction today for your business. But buying another business or something like that would not necessarily create that.
Exactly. So now you mainly work in the US. Do you have any clients outside of the US, or do you work only nationally in the United States alone?
So all of our work is in the US. When we talk about tax planning, that type of work, it's all in the US. We do have some clients that have entities that are overseas, or somebody that has an overseas entity with a US based entity. But when you look at tax planning, it's very oftentimes going to be specific by the jurisdiction that you're in and the country that you're in.
Exactly.
I would say, though, a lot of these concepts likely play and roll into different countries with some caveats and different laws and different rules that get applied to them.
Because I know, like, for example, Amazon, for example, these big companies, again, they expand into to the worldwide countries, right? So does that help these kind of things, these companies to reduce their taxes? Because I mentioned also, a lot of people complain about the richest people not paying enough taxes, or are they paying the most minimum amount possible that they can pay, that they only pay what is required for them to pay?
Yeah, so there is, and this is really kind of going into high-end advanced type tax planning, which we do, and there's a lot of advanced tax plan that you can do with overseas. What I typically say is that, generally stating, for your average millionaire or something in that realm, it doesn't make sense to go into that in depth of it. Now, when you have a major billion-dollar company, we're talking, trillion-dollar company, things get a little bit different about the tax planning. But there's advanced tax planning. That's what we kind of call. We have what we call core tax strategies and advanced tax strategies. Mm-hmm. When we talk about core tax strategies, these are tax strategies that are easy to understand, easy to implement, and they can be done at any level. Whether you're making $5,000 a year or $1 million a year, core tax strategies are meant for you. Advanced tax strategies are typically going to be strategies that we implement once you hit certain income levels. And so, if you're at a certain income level, now we're looking at advanced planning, and really that realm of where we can go into there really can go all over the place. And so the idea behind this is that we need to make sure, when we look at advanced tax planning, a little bit more complex, or a lot more complex in some instances, but we also need to make sure that we're dotting our I's and crossing our T's. We need to make sure that we're doing things correctly, because they provide a ton of tax savings, and they're oftentimes scrutinized by government agencies. That doesn't mean that they're not legal. It just means that, hey, if you make one little mistake, the government's going to come on top of it. So it's important that when we look at advanced planning, that we're finding someone that we really know, like, and trust, a vendor that is doing that strategy correctly. So we know, hey, we're in the clear, we're dotting our I's, we're crossing our T's correctly.
Yeah. So I have an idea, like, for example, in general, I thought now, in general, companies, especially maybe the small ones, they have certain number of employees. So I don't know if that's legal or not, but that could be maybe something they work on. Like, for example, you get a certain amount per month as a salary, right? So they can register a smaller amount to have their employees pay less taxes, whether they, and on the other side they get the difference. The more, like for example, someone is signed with a company and have a contract for $5,000 a month as a salary, but they have put it on the forms, on the tax forms, as like for example 3,000. So is that something legal to work with, or it's not legal? Is How do you see this, or do you know about these kind of things that could happen maybe?
Yeah, I'm not sure I'm quite understanding. So you're saying, let's say you have a contract for $5,000, you're paying that person $5,000, but you're only
But
reporting 3,000.
3,000, yeah. Does
Yeah,
that
that would be
happen?
that would be illegal, of course, not reporting that. But the other thing too is the person receiving those funds, really it comes down to that person too. So let's say you were getting all this money in, but for whatever reason, the person paying you did not send you a tax form. That does not mean that you no longer have to pay taxes on that. All that simply means is that you have to self-report those items. And so, any kind of cutting there would definitely not be advised, as long as I'm understanding you correctly.
Yeah, that's what I meant actually, because it might happen. So what it might happen? I don't know. Maybe it's not happened like in your scenarios, in your situations, but I have seen something happened, and some people have told me these kind of things so might happen. So how in general, how long any business or company can go without paying taxes? Like we mentioned, can they, for example, go for until they are profitable and seeing through 5 years not paying taxes? Can they go that long, or should they, like, as long as they are profitable, as long as they are starting profitable, they should start paying taxes from the first year, or they can like they have some kind of allowance for 2-3 years to see things stable and then pay the difference as the years go by?
Yeah, when you look at taxes, it really comes down to is, what is the profit of your business, and that's what you get taxed on. Now, a lot of clients and a lot of businesses, they say, "Hey, we're very profitable, we're not paying any taxes," or we're not stuck with a tax bill. And I always tell clients that too. I said I can get any single client down to zero taxes every single year. But that does not mean that there's not some type of sacrifice with that. If let's say you're making $1 million a year, you can't just say, I'm going to go from paying, making $1 million a year to zero from a tax standpoint without sacrificing anything. So a lot of times it comes into, different investment vehicles, whether it's buying equipment, things like that, whether it's investing in, say, a rental property, whether it's investing in some type of land development deal or something like that, where money is being put into different places. Sometimes it could be a retirement account, funding a retirement account, getting an expense today, some type of insurance policy. So we always say, like, hey, anybody can get to zero taxes, but that doesn't mean that you can get to zero taxes without having any kind of cash outlay or any kind of sacrifice that you're giving. So I always keep that in mind. So many people come to me like, hey, I heard that you can pay zero taxes. I said, yeah, you can. But the problem is what they didn't tell you is what they had to do, some of the investments that they had to make, some of the sacrifices they had to make in order to pay zero taxes. And now I'm mostly talking from a small business owner standpoint, not saying billion-dollar companies, but more of that small business owner standpoint.
Mm-hmm. So you personally, when you jumped into your own business, like what of the things that you felt were hard for you to handle? Did you think that this would be a success or a failure? Did you have this thought as a business or entrepreneur yourself?
So no, not necessarily. When I think that the first concept when you're starting into a business is you need to understand how you're taxed in general. So, and that's going to be obviously country by country specific. And we have a series on our podcast and we call our Starting a Business series, but it's laying down a foundation that we believe that everyone should have, that kind of solid foundation and understanding. How are they taxed? What does that look like? And how can we start to lower that tax liability? Mm-hmm. So many people are really, really good at what they do, but they're not good business owners. And so they're really good at what they do. They start a business and they do very well. They have a lot of income, but things just crumble because they don't understand the business side of it. And what my theory is that anybody can learn it, and it's not too hard to do. They just don't know where to look because there's so many different voices, so many different things talking to them out there. And so my starting point for any business owner always is build that foundation. You don't need to be an accountant. You don't need to be a tax expert, but you need to have a foundation and a basic understanding of how business is taxed, how the tax world works, so that you can then build off of that as you're building your business.
Yes. So why did you personally, why did you choose to have your own company? What was your thought behind that? Because you have worked in several companies and you've been a CFO of multiple of them, right? What made you want to change that and not work for other people, basically?
Yeah, that's a good question. I've never worked for anybody else. So I started at a very young age into being a business owner and just really enjoyed the flexibility and the structure of it. Now, I say that with a grain of salt because I always say, like, I've also never taken a vacation. I go on vacation, but I'm still working on vacation because I'm a business owner. So flexibility is one thing. I can go and leave and do whatever I want whenever I want. But at the same time, you lose some of that flexibility as, hey, I still got stuff to do. So even though I can wherever and however I want to do it, I still got work to do. That's a good question. Why don't I work for one? How could I work for somebody? I just have never done it. And so I think I would be a person that would be tough to be employed by someone because I wouldn't have the ability to make my own route or choose my own direction in a structured kind of big business setting.
So what personally things that you've used, resources, tools, or books that help you in your journey until now, for example?
Yeah, I think as a business owner, especially in my standpoint, when my focus is tax planning and content and educating people in tax planning, it's a constant learning phase. And that's something as a business owner I've constantly done. One book I read at a pretty young age was a book called The Millionaire Fast Lane by MJ DeMarco. And it's not a very big substance book, but it just got that entrepreneur mindset moving in me from a young age. And I still kind of go back to that book. I reread it maybe every few years. And I'm like, man, everything's popping back up. And you can start to see different choices I made in career paths and business paths. And it starts to lead back to that. So I always recommend it's a very quick, easy read. We actually had MJ DeMarco on our podcast, which was a really cool aspect to have somebody that inspired me so many years ago, now being able to talk to them and hear straight from them.
Awesome. So do you think there's something important that I have missed that you can mention again and talk about?
I think it's just this whole journey of tax minimization that I continue to be on a mission to present to people. The first piece of that, as we've kind of talked about already, is just understanding taxes and what does tax planning even mean? Get that understanding down. The second step of this journey to tax minimization, we call just building the foundation of your business. So when you first start your business, or if you're established for a while, we need to have a foundation. Your business is going to at somewhere hit a ceiling if you have no foundation. And so that foundation might be a solid bookkeeping system, might be a solid entity setup, might be a solid tax structure, whatever it is. So we always say, get an understand what tax planning is, build the foundation, and then we start to implement tax strategies. So we start with our core tax strategies, those tax strategies that are available to business owners of all stages, wherever they are at an income level. And the biggest thing about tax planning too is this idea of every year revisiting it, expanding, growing, and developing your tax planning. So tax planning is not just, hey, we're going to set it up this year and then we're done forever, and it just continues to run and move out. Some strategies you set up and you don't touch for a while. But the problem is that businesses are constantly changing. Your personal circumstances are constantly changing. Tax strategies, tax law is constantly changing. And so when we build up that foundation, we add core tax strategies. The next process is just kind of expanding, revisiting, and growing those strategies that you implemented. And so many business owners sit in that stage for so long. They're in that core stage, core tax strategies, then they're expanding, they're back into core tax strategies. They bounce between that area for very long. And then at some point, a time comes where we look at advanced planning. That could be when you're in a higher income level, then we're looking at advanced tax planning. A lot of people that comes at the time of when they go to sell their business. Now they have a highly appreciated asset, their business. They're looking to retire. They're going to have a massive gain from the sale of their business. How do we reduce the taxes from that? So that's kind of this journey that we call the Journey to Tax Minimization program, or Journey to Tax Minimization. And it's just kind of going along that journey and finding, bouncing between different areas and eventually kind of getting to that advanced tax planning once people hit a certain income level or have an exit of some sort.
Awesome. Well, Mike, thank you for being here today with me on this episode. Where can people get in touch with you and learn more about you if they need help with their taxes?
Yeah, the best place to find us is TaxSavingsPodcast.com. It's just www.taxsavingspodcast.com.
Well, awesome. Well, thank you, Mike, for being today with me on this episode of the SuccessGrid podcast.
Thanks for having me on.
Awesome.